The market sells down to test support Friday. Can the bears break through? This is Invest with Jacob. Okay guys, so in last week's video we talked about two potential paths lower. One, a more direct path where they break through support and head lower, and the other being an ABC bounce up in wave 2. The market sold down right to support, right to where we would expect them to break directly lower, and then closed for the day. Now the question is, can the bears break through? I'll get into that in just one second, but first, if you're new here, welcome to the show guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, so our Elliott Wave course has been out for a while now. We're getting great feedback on it, as you can see on the screen. People are using it, and it is exponentially improving their trading in just the first few weeks after taking the course. So if you're interested in that, stay tuned for later in the video. But for now, let's jump into the chart and take a look. Okay, guys, so let's start off with the big picture to start off the week. In the big picture, off of the October low, we were looking for an ABC up into this area that we are now. And they have pulled back off of that area. Our primary count remains that this was a wave B push up. There is still potential for one more push higher in this wave B, but overall, we would be looking for the wave C to start sooner rather than later toward the downside. And that pullback really will depend on the structure it takes. We are tracking a couple different paths. The first would be the ABC that I just mentioned, where we'd be in a C wave down, and as long as we see a 5-wave move to the downside in a larger degree, that would give us our first indication that we're on our way down in that C wave. So as of right now, we have the potential that we've topped in this B wave and that we're starting on our way down, but we still need a little more confirmation to see 5 waves in a larger degree before we actually move on to saying that's the case. So the other count that we're tracking in the big picture is a potential bullish count where this is wave 1 up, wave 2 down, wave 1 of 3, wave 2 of 3, and then wave 3 of 3 would be this move that we saw off the lows back here in March. And so this move up into the 4400 area just poked over the 1.0, which is a perfect C wave target, which is what we would expect this to be, and started to pull back. Now it hasn't pulled back enough to give us full confirmation. You can see that right here there's this, we'll zoom in a little on this one, there is this spike down day right here on June 14th. That low closed this gap, and they tested it on Friday. If we come in here and draw a line across, they tested that low on Friday, could not break through just yet. So that is the key level that we're watching, that 43.37 level on the SPX. If they can break that 43.37 level, as we dig in, we'll see a little more of why. That leads us to the 21 moving average, as you can see on the screen here in the 4306 area, 4300 area. That would be our next potential sticking point, but we would actually look to our fibs to give us a more accurate target. The 21 will most likely provide some support when it gets there. How much is to be determined. So if we jump over to the 1-hour chart, okay, so here we are on the 1-hour chart, and this gives you a little more context of what we're looking at. So here's that low that we looked at on the big picture at 43.37. Right here, they spiked it down, and then they took it up from there. And so we know that this is a key level because, one, they gapped over it. Then they came back and closed that gap and held it and took it up. They came back and tested it here and held it, came back and tested it here and held it, came back and tested it here and held it. So we know that the market wants this, the bulls at least want this area to hold, whereas the bears keep pushing down into this area trying to break through. So off of the top, there's a couple ways to look at it. I have a black count and a red count. So they both start off with 1, 2 as the same. The difference is in the red count, it's more bearish, and in the black count, it's a little more, gives us a little bigger of a bounce. So it's not bullish, but it's less bearish, I guess you could say. So in the move down in the red count, you have your 1, 2, which will be the same on both counts. But then in this gap down here, you had a 3 forward that you couldn't see, but you can see it in the futures chart. And then 5 here to give you wave 1 down, then wave 2 up, and then 1 of 3 down, 2 of 3 up. And I told you as long as they stayed below this high, we had pressure. They still had the ability to run this to the downside, and that's what they started to do. So we could be in this wave 3 of 3 to the downside. And so what we would look for there is a move that breaks the pivot, which lines up at 43.35. We're trying to get through 43.37, so it's essentially this low. And so that's how that lines up, where the pivot and the support are exactly in the same spot, almost like they set it up on purpose, because they probably do. And in that case, they came right down to the pivot, couldn't quite break through it. They got about halfway through it and bounced a little bit here. And now we would look for them to, if we're going in the more bearish scenario, we would look for them to continue down to at least the 42.97 area on the SPX. Then look for a bounce from there and then down to the 42.65 area. And then one more bounce and then on down to 42.34, which would give us 5 waves down in a larger degree. It would break through some key support, and it would be a strong indication that the top is in here and we're starting a move down. The alternative to that, where you have the same 1, 2 down, so you have 1 and 2, but then 3 would have finished here on Thursday, and then 4 and 5 down to complete wave 1 on Friday. All right, and then you'd look for an ABC up from there into this 43.95 to 43.23 region for a wave 2. Then you'd look to start wave 3 down with a 1 of 3, 2 of 3, and down from there. So it is possible that we bottomed in wave 1 on Friday, and now we're looking for an ABC bounce. We would look for that into the 43.95 again to 44.23 area. I did not see anything impulsive off of this low. It does look corrective to the upside, which generally tells us we're looking at going to be an ABC count. So either we get a little bit of grind up here in the overnights and then down through the pivot, or they're able to break out over this high, which is at the 43.86 level. And if they break out over that high, then it's much more likely we come up in this ABC toward the 43.95 to 44.25 area. Over on the NASDAQ, so on the NASDAQ big picture, same type of thing. We were looking for an ABC up since last October. That's exactly what we got. Went a little bit higher than we would have expected. Usually we want to see the 618 hold or right around there, but the 764 is a perfectly valid wave B target, and we know that the NASDAQ retraces heavily. As you can see here on this AB from the bottom, A goes up and B comes back almost all the way to the bottom, and you see that quite often on the NASDAQ with really deep retraces into areas. So they also did it over here where they came down off the high, came up, all the way back up, almost made a new high, and then collapsed. So NASDAQ is very famous for deep retraces. So coming up over the 764 is not shocking. That's why the box goes actually up a little higher than that to this peak over here. So the NASDAQ is in its wave B potential area, and we'd be looking for that C wave down in the NASDAQ as well as the primary count. And we'd be looking for an impulsive move to the downside. So they did hit the 764 and they about reversed off of that, and we did not go over the volume on ES, or on the SPX daily, but it was good volume on the reversal. It was also good volume on Friday. So the bears have come in with some volume selling, which is what you want to see on these kind of moves down. Now as we dig into the NASDAQ here and get down into the 1 hour chart, okay, so for me the NASDAQ has a much cleaner 5 waves down, or much easier to discern, I should say. So you have a 1, 2, and then wave 3, 4, and 5, and then we just have to decide, is this all of wave 2 up here? Okay, and if it is, it's in sync with the SPX, where this is your wave 2. The SPX has its 1 of 3 down and 2 of 3 up in place, and it's trying to come back down in 3 of 3, which is what we see here on NASDAQ as well, trying to come back down, getting a little bit of bounce. And this is not a big deal. These can be nested 1 and 2s. And they can even take this a little higher up for a bigger wave 2 of 3. But once they get over the 15,180 area on the NASDAQ, it starts to get a little bit precarious that they're going to hold the high here. But remember, NASDAQ does retrace quite deeply. So as long as they're below this high here at around the 15,250 area, as long as they're below that, okay, we can still come down in wave 3 of 3, making a bigger wave 2 of 3 in that case. The other option for the NASDAQ would be that we finished wave 1 here, down here, and this would be the A wave of 2, and then the B wave of 2, quite deep retrace, but again, here we are, that's what the NASDAQ does. And then this would be a C wave up toward the 15,261 area. Now the interesting part about that count is that this should be a C wave, which means this should be an impulsive move to the upside. and it really isn't an impulsive move to the upside. But 15,261 would be the target for that move as a general ABC for wave 2. However, they can take it higher up for a little bit bigger of a retrace in wave 2. Just that the 1.0 is your common target, 15,261, and then 15,326 would be your next target to the upside. So those are the two paths we're looking at. Both charts kind of in sync, which is what you want to see, where they both have the setup to the downside in wave 3 of 3, and they both have the alternate ABC to the upside, where the down move is not ready yet. We get the ABC up into that wave 2 area and then look for the next move down after that. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It takes you right over to the website. Once you're there, check out our membership plans area. We have 3 plans on here. 2 of them are monthly plans, and then you can get the Elliott Wave for Beginners course on its own. That's what I talked about earlier in the video. This course is incredible. It's 25 videos where I break down every tool that I use, my chart setup, how I confirm tops and bottoms, what I'm looking for, all of the Elliott Wave for Beginners waves broken down into each target and how to use them. It's a very simple, easy to follow course that will give you a strong understanding of Elliott Wave. Again, this course is available for purchase on its own. However, it is included in both of my monthly rooms. So if you get either membership, you have access to the course as well. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where we go over exactly where we are in the count and what to expect, as well as that trading material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are looking for day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trades that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, averaging 3 to 4% gains per week, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, key takeaways for today. It's pretty simple for the SPX. They need to come down and break that 43.37 area and follow through to 43.16. Once they do that, we would really like to see them hit the 42.97 area overall, and then we should see a bounce from there. However, if they're unable to break that support, we would look for an ABC back up into that 43.95 to 44.23 region. Over on the NASDAQ, very similar setups on both charts. On the NASDAQ, we have a pretty clear wave 1 ending, and then we have a 1 and 2 of 3 setup, where we could be looking at a move down in 3 of 3 as long as they come down and break through the support down here at the bottom toward the 14,967 area. However, if they cannot come down and break through support, we would look for that ABC back up into that 15,261 to 15,326 area. Guys, that is the market update for today. I will talk to you tomorrow.